Hello, this is Brian Rezny. It's question and answer day. And one of the questions I've seen as of late is, of course, the market's up year to date. The bond market hasn't done as well nearly as the stock market has. And I'm getting a lot of calls from investors who are either in the wrong places investment, over allocated to bonds, have kind of lackluster returns in a good economy. And they're like, well, should I increase my risk at this point? Or they're sitting on a lot of cash. One of the biggest problems I think that face investors is actually quality advice. What is your real risk profile? What does risk really mean? Let me give you our scenario. We always look at a scale from 1 to 10. 10 is speculation, Vegas. Never speculate with your money. 1's a mattress. Don't put it in the mattress, you're not going to make any money. Generally speaking, our clients are 9, aggressive growth down to about a 5. Much less than a 5 risk level. You might as well stick your money in the bank and laddered CDs because you're probably not going to have a chance to make any meaningful return on your money given the risk you're taking. So regardless if you're a 5 or you're a 9 or somewhere in between, you're going to have some inter-year volatility. Again, never be a 10. Never buy assets that can go to 0. Never speculate. Have a properly diversified portfolio. But ultimately, whether you're 50, 65, or 75, you could be around for another 25, 30, 40, 50 years, depending on age. And unfortunately, too many investors are too conservative in their portfolio, meaning they magically think, well, if I have a lot of bonds in my portfolio, it'll bring down the risk. But again, bonds can be as volatile at times as the equity market. So if I look at the next 5 years, I think a lot of investors that call my TV and radio show are not properly invested. And I think many of you, because of having an overallocation, whether it's in the Europe zone, whether an overallocation to bonds, whether an overallocation to too much cash, ultimately it's going to hurt your long-term return. Making a couple extra percent on your money each and every year over the next 5, 10, 15, 20 years, again, remember you'll have a long-term retirement, is going to make a significant difference. Maybe you have a little bit more inter-year volatility, but you're going to have a great opportunity, in my opinion, to make a better overall return, total return, and have a more secure retirement because your portfolio ultimately will be a larger nest egg. If you're not a client of our firm, it's time you became a client. Call Rezny Wealth Management for a consultation. We do manage portfolios $500,000 and greater. Make sure you have yourself a happy holiday season, a Merry Christmas, and a Happy New Year.